there should be more than one candle, right? We are not talking about single candle.
Yes, we're
Piercing
talking
pattern is combination of a number of candles.
correct. What's your understanding for it, Eric?
Like, it's not really like there's a pattern I pay attention is morning star, evening star.
Okay.
So piercing pattern maybe it's sort of like impulsive, maybe something, some sort of impulse. It's showing maybe some impulse momentum. Maybe it's coming up. I'm just guessing. I don't know exactly. So,
Okay, no worries.
yeah.
So you should be able to see my screen right now. I like to be objective in the way how I teach. This type of trading, I'm a big believer for patterns only if a person understands the meaning behind it. Some people will use it just for the sake of using it, and that's what causes the inconsistencies actually. So what is a piercing pattern? Well, a piercing pattern is one of a few important candlesticks patterns that technical analysts typically spot on a price series chart. This pattern is formed by two consecutive candlestick marks. The first candlestick is red or black, signifying a down day, and the second is white or green, signifying an up day. When a trader is watching for a bullish reversal, any red candlestick followed by a white candlestick could be an alert. There are a few things that set a piercing pattern apart from general red candlestick, white candlestick pattern. In a piercing pattern, a white candlestick follows a red candlestick with a 6-minute gap in the red candlestick close and white candlestick open. On the second day, the candlestick's body must also lengthen to cover at least half of the previous day's red candlestick. Generally, the gap down is substantially increased by the closing price are good signs for a reversal. In a piercing pattern, the second day white candle will close at or above the midpoint of the previous day's red candlestick. So that's why this type of definitions for me doesn't make any sense. It's just simply telling you, hey,
now I got it. Yeah.
The first candle has to be red. The same candle has to be white, but it doesn't explain the elements behind what's really happening. So in my honest opinion, when you have a bearish candle where there's more sellers than buyers, there's more supply than demand, it reaches a certain price point, and then buyers took over in the very end where the closing price reached equal or more than half of the body of the bearish candle. That means that there's a lot of force that is being implied into the price of that particular asset class. So when that happens, the odds and probability that it could reverse is highly probable, especially if it's coming from an area of demand. Okay, so that's what it means. Let me give you some examples.
But the thing is, you know, do we need to call where it happens? It's, you know, is it like supply or demand lines? Will it matter? Or where, or anywhere in the chart, this pattern matters?
Okay.
Or, you know, is it like a support and resistance line or?
Very good. Good question. Okay, so since that's the topic for today, giving you some trading tips to piercing patterns, I will go through different ones and just go through here. Okay. Here is doesn't really matter anyway. It doesn't matter if I visit the Kiwi against the Japanese yen, or I also go through the indices and stocks and whether if they're powerful or not. Okay, so let's give you some examples. So you have a bearish candle, then you have a bullish candle where the closing price is equal or greater than halfway of the bearish candle. Notice that the price did come from an area of demand.
You know, it happened in March 9th, but it didn't go up, March 9th.
Okay, so let's look into that.
No, I mean, yeah.
Just bear with me there. And I'll tell you exactly why. Okay, so let's look into this first for a second. This one is a piercing pattern, and it worked right at this point in time. It reversed and give you 74 tips right there. Okay, and then you have a question right there. This one is also a piercing pattern, but didn't work out. And here's another piercing pattern. That worked out. Okay, let's see if there's anything else in between.
Yeah.
Here's another one. That didn't work out. Here's another one. That didn't work out. And so out of 1, 2, 3, 4, 5, 3 didn't work out, 2 only worked out. But why did this work out? Why is that, do you think, Eric?
Yeah, it could be the demand line might matter. Yeah.
Okay, let's take that in consideration. You said it has to come from level demand. Well, this one is definitely from level demand. That definitely worked out. This one also comes from a level of demand, but it failed. This one is not a level of demand. It is coming from a supply. This one is also from a demand, but it failed.
Yeah, so we can, I'm not sure, maybe just alone can be relied upon to make decision based solely on this.
Mm-hmm. So the question now is, are piercing patterns really accurate, or are they, can we really make money using piercing patterns? That's the question.
it shows the behavior of people. They like to. It shows the sort of this is a price that buyer buyers attempt to come in, kind of thing. This is attractive price, kind of thing. Maybe it just show about that.
Okay. All right. So here we go. 1. Definitely, in order to be a form of reversal, it needs to reverse or it has to come from a demand. Definitely. But doesn't necessarily just because of the level of demand that it could continue to go to the upside. Number 2, it needs to form a higher low. When you have a higher low from a demand, then your probability of winning increases. 3, you need to check the trend because the trend is your friend. Okay, so let's look into this one. Why did this one work? Easy. Notice the bearish candle. Notice the low. I want you to observe the second candle. It created a higher low. Despite a lower low, but you have a higher low. When you have a higher low, you have a higher odds of winning to the upside. I want you to observe this one. Well, you didn't create a higher low, but you have a lower low. Look at this one, higher low, you have a lower low. This one, you have a lower low. And then you're gonna come and say to me, hey, but Ronaldo, how about this? You have a lower low. Absolutely. So this is now then, since this created a much better deal, then you have a better confirmation that the kiwi is way stronger than the Japanese yen, then the odds and probability that it may continue to the upside is highly probable only if it breaks through that, unless this is a false bear breakout. When you have a false breakout, you gotta be careful. Because if you're buying through here, notice the trend, you are in a downtrend. It's been downtrending since July. Okay. At the same time, here is totally different. Let me erase this for a second. Here has been uptrending from these levels, creating new highs from there. Here was a downtrend from here, but there is now a change of trend from there out of your higher low, creating your higher high, and very strong demand area. And how do we know that? That's easy. Here, every time it comes back, got rejected, comes back up, got rejected, comes back up, rejected, comes back up, rejected. Finally, after the fourth time, it retested it, got rejected at one point, but held its price. And here you have a breakout. After this breakout from a supply becomes now a demand from here. First time it got tested from a level of demand. Since this is strong, and now you have a higher low, it gives you a higher odds that it could potentially head back up after 1, 2, 3, 4, 6, 7, 8, 9, 10, 11 weeks. 11 weeks that it's been dropping. I have no doubt it's also got exhausted. See, everything you see fit, everything has been lower lows. First time it created a higher low where the bulls finally taking over. So the support of buyers here is very strong. Hence, there's a lot of demand within that price point. So the odds that it will continue to go to the upside is highly probable. Bam. Okay, so that's why it worked out. See the difference between the two? Now, coming from here, you have a different dynamic or the change of price in terms of the trend changes. You have a higher low over here, now you have a lower high. So what's the high of this one? 83,903, 83,802. 903, all of a sudden you have a higher low. You have a higher high here. You have a higher high. You have a higher low. And all of a sudden you have a lower high. Notice though, the amount of force is huge, so there's a lot of volatility. This one no longer didn't want to play out. It gave, this is to be that strong, then this bearish candle should be up here. This should be up here. That should be now a new higher high. Didn't want to, so you now have a change of trend. What's happening right there? So the odds and probability to create a lower low somewhere sometime is highly probable. Let's see if our theory is correct. Bam. Low 77,835, 78,003, 77,835. So you have a clear cut of a lower low. And then you're seeing this, you have a lower low with a piercing pattern. This is false. This is simply a stabilization from this momentum before a continuation of the price to drop even further. Bam, creating a lower high. Same deal is gonna happen. Another lower high. Here you'll be saying, well, this is not from a demand, but in actual fact, it is sitting on a supply area. Lower high, lower low, no go. Hence another failure. And you're gonna come on this side. You'll be saying, well, second time it got tested, third time it got tested from the first time it got tested from this point. So what does this now mean? Well, we're in a downtrend, lower high, lower low, still a higher low. And you'll be saying, well, there's going to be a lot of buyers within this portion. Can it continue? There's a probability, but there's no proof, confirmation. Why? Because you're still in a lower low. As far as I'm concerned, it will keep dropping. Okay, let's see. Hence, no confirmation. This is your only confirmation after this. Okay. Back to the demand level. Breaking out. It's the low of this, 53.4, 61.9, creating now a new low. Totally different ball game. Retested from a lower low, lower high. New lower low will occur, create a new lower low. From this price point, and then retested back to area demand. This is stronger than this, hence price is up here. However, I am not convinced that this is going to go even further to the upside unless a higher level form.
I see. Got you. Now I'm very clear.
Right. So my piercing patterns are tricky. Your highs, mainly the lows, is very important element to look at. Okay, so let's go through different one.
So that one will be valid for downside as well, right? Right now we are looking at from bullish perspective.
Correct. So, but at this point, if you entered here, yes, currently you're in a winning situation. However, it's only Tuesday. We'll see what happens by the end of the week.
Mm-hmm.
So trade management is important, of course. If you're seeing this situation, say for example, you entered, take your money and run. Likewise, say for example, over here, it went up to a certain degree, take your money and run. Same thing over here, take your money and run before it can basically drop, right? So, but this stay away from lower lows. You see a higher low, you have higher odds of winning. Likewise for this one. Let's take oil, for example. After 3 days that it's been dropping, this is a piercing pattern for sure, but you have a lower low and it's falling. Actually, we called this one that is going to fail, it's going to drop, that we're bearish. Funny enough, oil has been dropping massively, but the price of gasoline hasn't dropped either, so which is kind of unusual. But nevertheless, as part of the theory, is simply there could be a potential reversal, like, just a little bit. However, I am not convinced that this is gonna go up. In my opinion, it can come back down right at $62 a barrel. Notice this one, you have a higher low. Notice the price of it pushing it to the upside. That's a good one right there. Let's see further ones. It's not considered because it's not halfway of the body. Not halfway of the body. Nothing. Here's another one. You have a lower low over here though, which is from a demand. Here's a exception to the rule because you have a higher low from a higher high. So that's why it's been strong. So also the dynamics of the trend is definitely important. Looking at that. That's not it. Nothing. Here's another one. You have a higher low, and then it took 2 days before it continued. So from a higher low, creating a proper higher low, lower low, higher low, hence creating a new higher high. That's a good one. Here is a failure from a demand, but you have a lower low, hence dropping, coming from a lower.
Lower high.
So another. Here, you might have a lower low, but it's almost an engulfing right there. Oh, here's an exception, not exception to the rule. Lower low, definitely piercing pattern, but you have an uptrend. Very strong. Okay. So,
this is quite useful. Now, this
here, failure, because you're in a downtrend. Despite a higher low, you have a lower low, stability before continuation of price to the downside. Okay. How about this one? You have a higher low, also have a higher low, but you have a lower high where price is basically falling, hence just stability. Okay. So like knowing, looking at the trend is definitely very important. Where is it coming from? Is it from a demand, but who has hierarchy, the higher low or the lower high? So that needs to be looked at. Then from there is simply creating your odds from that perspective. Here, from all the way, look at that, it's been tanking all the way down, and you have a higher low, bam, way oversold, basically reversed. So that higher low is also powerful. You're saying, well, how about this one? You have a higher low. You did, but price is already at the supply level too, though. No go. So depending on the dynamics, the position of the price is very important. Okay, let's look at the S&P. Let's look at certain different price right here. Excellent. Let's see, what's the opening price of this one? 2723, 272. That's the closing price. 27216. Open 2723, 216. Oh yeah, this is still considered as a piercing pattern, not engulfing because the closing price is not above the opening. Notice higher low, hence so I bullish to the upside. A little bit more, it's gonna head on that side right there. This one, unless we calculate, from what we can see, I believe it's just above halfway of the body. Yep, beautiful higher low. So I continue, it went up 2 days in a row. All right, let's see. This one, okay, nope, nothing because it's below the body. Nothing.
Interesting.
Nothing. Here, beautiful higher low. Let's take this one. Beautiful higher low, pierced through it. Bulls basically got in control, good level of demand, breakout. Okay. See if we can find one more. Oh yeah, so here. Pierced through it, but you have a lower low. Didn't want to play out until a few days before it went to the upside. And let's do one more, then we can move forward. Here, downtrend, pointing to the downside, lower high, lower low. When I say lower high, notice everything's pointing to the downside, lower high, lower low, pierced through it though. Didn't want to fail. I mean, it didn't want to continue or reverse. It failed further to the downside. All right, let's look at the Dow. Okay, so the Dow, in my opinion, also did the same thing. Beautiful. Same thing over here. Really nice. Higher low. Bunch of higher highs. Also higher low. And now back up to 24. Okay. This one, same thing. Higher low. Notice it boosted 2 days in a row. This one failed because of this lower high. And then, but if you're going to say a bunch of lower highs here, but why did this work? Come from a demand, higher low from there. Way too strong, way too powerful. This one, higher low, boom. Notice in terms of the price heading towards the upside. Notice before, not much volatility.
So the candle body should have some size, right? It should have at least like, shouldn't be like near doji kind of. The body must have some size.
Exactly. So the candle has to have force. No force, any uncertainty candle, it's no go, because that's what it defines it as, right? It has to be bullish or bearish. And when you have a bullish candle or bearish candle, that means it has force. So like this one has force, this one also has force. Notice the higher low. Notice it continued its trend to the upside. Okay, let's take a look at oil. Let's go at gold. Gold, gold, gold. Ooh, gold can continue to go further. Here, lower high, but you have a higher low. So here is an anomaly. Oh no, it's not a Pearson pattern. It's a close 1323.25, 1323.18, 25. So that's an engulfing. It's not a Pearson pattern. Oh, here we go. Here's a one, but you have a lower low, bunch of lower highs. So here's the rule to the exception. It's one of them that basically worked out. So that's pretty cool. Likewise for this. Lower high, back near demand. You have higher low over here, but you have a lower low over here. It worked out, stabilized before it can, well, before it went up to 12.95. Here's a nice one. Oh, actually, it's more of a bullish engulfing. Oh, here, okay, you have piercing pattern from a bullish candle. So this just eliminates that bearish. So they decided to push through to the upside. No, it doesn't. Could be, but you need to calculate mathematically with that. Almost, but not quite. So this one, you have bearish candle, bullish candle, candle higher low, another higher low, and pushed it to the upside. All right, let's look at copper. Copper has been very strong. Nice one, higher low, and all the way down to 3.14. This one, despite a higher low, didn't want to play out. Lower high, basically failed. See if we do a couple more on this side. Same thing, bullish candle, bearish candle, pierced through it, went up. Nope, that's not it, because it's not halfway. Here, he wanted to, and then came back down and failed from that lower low. And let's look at the UK. See if we could find something. Nope, almost, but not here. Very nice prism pattern from a higher low continuation. This is lower low, didn't want to, failed instead. Okay. Let's see if we can have further ones. Nothing. That didn't qualify, is not high enough. Here.
That didn't work. Oh, because it's lower high.
It only, this is good if this is going to be a very bullish candle, they will continue, but it doesn't want to play like this. Trade management, once again, you have a great doji, you got to get out. This is your second opportunity of getting out, then you just basically short because lower high has hierarchy. Okay, before it changed its direction. Here is a nice one that worked out. Higher low, and it continued to go to the upside. We'll do a couple more. Very nice. Higher low from the upside, coming from a breakout from this supply, demand, breaking out, demand, breaking out, and went all the way to the top. Likewise for this, higher low, but you have a bunch of lower highs. You can only probably just there, not much. So trade management is important. Okay, let's look at certain stocks. Let's grab Netflix. See if we would be able to determine some. And if there is a thing about stocks that are just too choppy, it's going to be a challenge finding one. But if we find one, then actually it'll be good. Okay, this almost qualifies. And continue to go to the upside, higher low, uptrending to the upside, trending to the upside, it's an uptrend. Likewise for this, higher low, we went to supply. Oh wow, it's big gaps. These gaps. Very choppy. Okay, look at Apple. Same thing with this. None. Here we go. Lower low. It went up, then came back and actually gap to the downside. No go.
Interesting.
Yeah. Okay, let's look at Citigroup. I'm just picking stuff in random now. Nothing, didn't see anything over there. Nothing on that side. Nope. Nothing. Nothing. All right, Walmart. Same thing. Here's my stocks are ridiculous. I don't know why people still trade stocks, to be honest. Oh, here is one. Worked out very well. Higher low. Pierced. Went up.
Mm.
It's coming from, that's May. Okay, this is where, that's 2017.
When you actually look at it, it's not that very money also.
Yeah. Okay, let's go back to currencies. Let's look at the euro, which is way better. It's much more smoother. Let's look at the daily time frame right here. And nothing right there. Nothing right there.
There's one in the beginning of it.
Right there? Oh, right here. So one right here, you have higher low. Didn't want to play out though. Too strong. Failure. Okay. Same thing with this. Do you want to play out? You have a lower low. That's why no go. You have a lower low, failure. You have a lower low, failure. But this one then came up after that. The only reason why it went up is because of the trend. That's why the trend is so strong. Okay, let's look at bigger time frames too. Go monthly for a second. Here is a nice one. Only reason why it worked out is because the low is higher compared to that. And when it confirmed from there, that's why you have after like 2 candles, it went to the upside. Let's look at 1 hour, smaller time frame. Here, higher low, went up to the upside. Here, you can argue the same, higher low. This was news based, 10 o'clock, 10:30 actually. Okay, so that's what happened with that. Too small. Here we can argue with that one too, higher low before we went to the upside. Okay, so that being said, there's quite evidence right there that number one, what's imperative is the trend. 2, definitely has to come from in demand. 3, higher low is important. Even better if it creates a higher low from a higher low as a change of trend, depending as well whether in terms of the time frame. And when you see that, then you have a high probability that it will go to the upside from there. Okay. So let's see any potential ones. Nothing. Let's go to the pound. Nothing. The dollar yen. quite very bullish. Okay, nothing. Dollar Swiss, nothing. Aussie against the US dollar, nothing here. See, that's also a good one right there. Dollar CAD, nothing. Kiwi against the US dollar, nothing. Euro, nothing. Pound, none. Aussie US dollar, nothing. Oh, we can say here too, you have a piercing pattern, you have a lower low there, then how come this one worked? One, you have a higher high, you have a higher low, still a higher low. If this was a lower high coming from a lower high, then this would definitely would have failed. Okay. CAD, Japanese yen, none. See here you have a piercing pattern through there. So it continue to go to the upside. And last but not least, Kiwi, none. Okay, so expecting a supply level. Curious, let's go through 4 hours and see if there's any potential ones, just as a form of an exercise. Pound, 0. Dollar yen, nothing. Dollar Swiss, nothing. Aussie US dollar, nothing. Dollar CAD, nothing. Kiwi against the US dollar, nothing. So you have one right there though, almost. And you have a lower low, hence that's why it's a failure. Kiwi. Sorry, that's where we are at this point. Euro US dollar. None. You have a bullish one right there though, but it didn't. It's not a piercing pattern. Euro yen. Ooh, okay. You have piercing pattern there. You have a lower low, but worked out. One because of strong short-term trend. Pound yen. None. It's still pushing the price to the upside. Yen is still pretty weak. Aussie, nothing. Don't have anything for there. And then the CAD, none. Kiwi, none. All right. Oh yeah. So that's here. It worked. No, it didn't work out because of a strong bearish candle right there. Bearish trend. Well, I hope you enjoyed that, Eric. Did you learn something new today based on piercing patterns and the tips?
Yeah, thank you. I
probably
it's sort of eye-opening. I thought this is eye-opening for me.
Excellent. I hope you enjoyed too with your free classes. Will you be thinking of doing the online class there, Eric, or you're thinking of doing more of the self-learning component?
Yeah, I'm thinking about that. Like I was checking. You have first 100 students, you have 50% discount. So I'm thinking that program.
Yes, perfect. Well, just let us know, and then we'll register you.
Yeah, sure. Yeah, once I settle, in a couple of days, I'll let you know.
Alrighty, sounds good.
Thank you.
Enjoy.
Thank you.